Hello. So today we will look at US Fed fund rates and also how the US economy, goes into recession or not, and how does it impact gold, and also how does it impact silver. So US, so when economy inflation is there, so usually the Fed in US they start increasing the rates keeps going up at a specific, they try to curb the inflation down by increasing the rate. At some point they start tapering it, and then they keep it that way until something happens in the economy where economy, because of the raised interest rates, the economy starts faltering, right? And then Fed will be pushed in the situation of cutting the rate. So this is the usual the rate hike and the cutting cycle that the Fed do to keep the inflation in control. When you overdo it, it's possible that the economy falters so much that it goes into recession, right? So when there is a recession, the earnings go down. The general market has a lot of fear. So the market also corrects a lot. During this period, the market goes in a bear market. And usually in times like this, gold is the place to be, as a safety bet. But gold also goes up when you raise the, when you are cutting the interest rates, right? So we will see that association. So I'll go back to the history of Fed, how, how this is the history of like 20, 30 years. So let me take a simple example of the nearest example that we had back in 2004. In April 2004, uh, inflation started to go high in US. So for a period of 2004 to up to 2006, for over a period of 2 years, every month or 2 months, Fed used to raise the rate by 0.25% or 0.5%. So you can see that in April it was 1% and if I fund rate, and then it went up to 5% in June 2006. Between June 2006 and August 2007, for a period of 1 year, they kept the interest rate at this high level. Now, if I think if you remember, during that time, the financial crisis happened. So US real estate market suffered. Why they suffered? Because you raised the interest rate, so mortgage and everything went up. People had a lot of problems in paying up their mortgage, and there were a lot of foreclosures coming in. And US real estate is the number one employer there. So when your real estate market goes down, the economy falters, and because the economy start faltering around this 2007 period, the Fed was now looking at the bad signs, and then they started cutting the rates. And within a couple of months, the recession happened. The recession is in the gray bar here. So the gray represents the recession. So they entered recession around October or November 2007. It lasted till 2009, right? So May 2009 or March 2009. Till that point, it lasted. Till that point, the only way that the Fed could control the situation was cutting the rates. So they kept on cutting rates. By the time 2010, 2009 ended, the rates went to nearly 0 or zero point 0.5, right? So this is the cycle of how a rate increase happens because we are in an inflation. To curb the inflation, they increase the rates and they sustain the rates. And because they increase rates, makes people to pay more in interest. So all these real estate and all the the auto loans and everything started failing. The economy starts falling. This is a cycle that goes on, right? So now what we will see is how the gold reacted during this period of 2004 to 2009. So I'll go to the gold chart. So this is a period of the green bar represents the period of where this is the period where the US Fed started making decisions that they are going to raise the rate, and they raised the rate between this 2004 period and 2006. So you can see that the gold was around $390. It went up to 740, 735, which is almost two times. So it went up to it basically went up 100%. during this phase of the rate when the rate got increased, right? And now for the next few months, the 6 months or 8 months, the US kept the rates at the same period. So till the 2007, August 2007, you can see that the gold sustained. It didn't come down, it sustained in this period. Okay, so it basically consolidated over this period, and then the blue represent the rate cut period. So the US Fed started thinking that there is a problem coming ahead, so they started cutting the rates. So when you cut the rate, what happens is your yield of the treasury goes down, and because the yield is usually inversely proportional to gold, the gold also will react and go up. So now it goes up. This is the point, the red bar is the point where you had the recession. So it happened 3 4 months into the rate cut. The recession happened around the November month, and then it was a volatile period for gold. It went up, it went down. So it went up till 1000, and then it came down to 680, which is almost like a 30% drop here. So the gold did fall during the recession, but in the overall context, it is still high because it is, when the rate cut stopped around this point, it was a 690. So it gave up basically the gains that it had around this period. But it's not a big fall when you consider how the stock market fell during this period, right? So now gold is again consolidating in this period, and you can see that the moment the economy the recession ended, still the gold is still the play to go. For a year it went up. So the overall, if you're a if you know the thesis well, when the Fed starts raising rates, at that point, if you take on a position in gold at around the 390, you would be making around a period of 7 years, it goes to 300 to 1900. This is in a period where the market is not doing that much. So if I just look, go to the SPX chart, which is a S&P 500, you can see the volatility here. In the 2004 6, it's somewhere here. The market is still on a uptrend because it's in that final stage of the run. Now, during this phase of November 2007, that's when the US Fed starts cutting rate. You can see that it's dropping from 1500 points to 1200, almost 200 points lost. And then it tried to recover, but then during the recession, when the recession started, it went from 1400 all the way to 669, which is almost like 50% of the S&P market it lost when the Lehman crisis and other things happened. And then by the time that this peak was hit again, that is this peak of 1500 was hit again, it was 2013, right? So yes, it did a recovery in this period, but still the overall, if you had invested in this period of 2004 to 2011, you did not gain much if you entered here, and then if you are looking at here. So the key thing to note here is during a rate increase and a rate cut cycle, gold investment sustains over that long period, while the S&P or the in general market goes up and down, right? So if it is goes down, and then if you are able to get a entry here, great, you have done well because you rode all the way from say 600 700 to this, right? So the way you have to look at this is your what the US Fed is doing with their rate cycle is very important to us, not only for the global economy, but also for the, say, even the Nifty, right? So if I look at the Nifty as well, you would see that the Nifty was in a really big bull trend. Then all of a sudden, US started having problems. Then you had the big drop. So you had a lot of volatility between the 2 3 year period, right? So what I would say is gold has already gone up, as you know, from 1700 to 2000. Now let's look at what is happening now. Now US Fed rate, if I go back here, in the COVID period, after COVID period, around 2022, they started increasing the rates, right? So it went up till 5%. And then from August 2023 to September 2024, again 1 year, they kept the rate at the same period. So let's look at the gold in this situation. So the moment when they started the rate increase, as you can see, it went up, and now they are cutting the rates. So that means that they are now cutting the rates because they are seeing signs of economy weakness. It's still not a recession in US. It's still, the economy wise, it is still booming, but they are cutting it because uh, the rates are high and they are seeing the bad signs. Now, in the recent few weeks, the US housing market has started faltering. So, which we can know by looking at the news, and also you can look at the home builders or the IYR. This is the US state real estate ETF. So, you can see that over the last 1 month period, this month alone, it has lost 10% of its ETF value here. So there is a sign of US real estate market coming down. So the history is trying to repeat itself. So this is not me saying that there is a, we are now going to go into recession, but things are faltering because the situation right now in US is the rate is coming down, but the inflation data in the last couple of months, you can see that the inflation is starting to pick up, which is a bad sign because they want to cut rates, but if the inflation goes up, usually in the inflation going up, they have to increase the rates. So what does Fed do? They cannot go either way now. So that is why the market panicked in the last, 2 days back. You had the Fed rate cut, announced for 0.25, 0.25 basis points, and they saw that the Fed was hawkish in their comments because they could see that the Fed was in a really tricky position. Do I raise the rates to curb the inflation, or do I keep cutting rates because people are not able to pay the interest because the US housing market is going down? So it's a very interesting few months ahead. But so you will have a lot of volatility in the market from now on for the general stock market perspective. Maybe 1 quarter, 2 quarter down the line, it's a very realistic chance that the US could go into a recession if they can't sustain the current rates. So during this time, even though gold is high at 2,600, it's still a better investment from a safety perspective. But I do expect, because gold has run up a lot, I do expect gold to come down a little bit. So from 2,600, maybe it might come down to this level of, you will probably have a, dip down to 1,000, sometime in the next few months. If you get such an opportunity, then I think again probably you need to reload in the gold or gold related investments. So that would be the way I would look at it. This is not a financial advice. It's more of the just looking at what has happened in history and then trying to see if we can learn something from it, right? And whenever the other point I would say is wherever the gold follows, usually the silver also follows. If you look at the silver, it's even more interesting because during a rate cut period, that is in the period of when a rate cut actually happens, that is from a 2008 period to 2009 period, this 1 year period, silver actually outshined the gold. So if you look back here, silver was around when the recession stopped. The silver was around $9, and then it went up in the 2 year period to $48, which is almost 5 times. So, but silver is a bit more volatile, but usually silver does very well during the rate cut cycle, and also once the recession is done, silver really outlast. So, these are the two things that I would keep in mind. We are from a market's point of view, we are entering a very dangerous time. So you need to be careful. Just be in cash, as also at sometimes take profits where you can, and you will always get an opportunity in the market, right? So if market goes down, if there is a US recession and if India also follows, then you keep the powder dry, keep in be in the defensive areas, and when there is a fear in the street, at that time maybe you can do a lump sum investment or something, and then the or even like a dollar cost average are out. you would be in a better position at that time. So I think it's a very uh, important period at this time. So I hope you can learn something about it and make your own judgment of this. Thank you.